This is your weekend market recap for Friday, April 15th, 2022. Let's go.
This is Dan Max at EXP Realty, aka the Trading Agent, and this is my stock, Bitcoin, gold, and silver daily market recaps. Please subscribe if you like what you see. Thank you.
This is Dan Max at EXP Realty, aka the Trading Agent, and this is your weekend market recap for Good Friday, April 15th, 2022. Let's get into it. As always, we start off in the Discord room. If you have any questions, thoughts, or concerns about this video, you're newer to trading and you need some help, the Discord link is in the description below. Stop on by. Again, we are always updating people and folks about what's going on in the market, eyes on trades, what we're thinking, what we're looking at, potential for what's coming up. Also, too, if you're newer and you need back to basic videos, introduction videos, want to see the alerts and trades, again, all of this stuff is in the side channels on the Discord room. I try to keep it pretty clean and tight so that if people have questions, concerns, or thoughts, and they come in here, they know where the content that they're looking for is probably going to be. On that note, let's start off on Bitcoin as always. Not really much to say other than we talked about this area getting up in the volume at price zone. You had the double top, you had to look up, and as soon as 46,000, 45,000 failed, it was obvious that we were going to come down lower. Again, once you get into ranges and areas and you do not act well, meaning the action does not follow through, you have to be on red alert. And what I mean red alert is beware. You know, this action in itself can be what's called a bull trap. If you're not familiar, again, check out the back to basic videos, talk about bull and bear traps. And this kind of action happens a lot. And so when you break out with no volume, this is what I was watching, I was looking for the volume. You actually had a little more bearish volume when you failed. That was a sign that this is probably coming back down somewhere into this range initially, somewhere in the low 40,000s, upper 30,000s. This is where your first downside target would be if you're a bear. I mean, I think you can see there's a little bit of a trend line here. We're sitting right at it. Just be aware. If this thing breaks, and these levels currently we're at, your next downside has to be 35,000. If that fails, go back to the last year lows in the summer, and that's around 30,000. You know, Bitcoin, bulls, bears, whatever. Remember, trading is trading. Don't be emotional about it. If it doesn't work, it's not your fault. If something goes lower, the market does what it's going to do. And so if you believe in free market, I wouldn't even necessarily call it free markets. If you believe that the market is always right and you just try to do what the market's doing, it's a little easier. All right, TLT. We like this at the 100 month. It failed. Now we're at the channel lows. We talked about this 120 area, 123 area, just potentially being support. As the market was getting shredded this week, not even shredded, just being choppy, so is the bond market. I think, again, I talked about this 3-day range yesterday. If it break, it could go lower. There was your cue. It went lower. It broke the 3-day range. If you let me zoom in on it, you can see you had successive lows around 122.70. Once that failed, boom, going lower. I do think we're close to the bottom in rates going higher near term, because look at what's going on. I call this riding the lightning, where you just ride the lower trend bound. Now you break below it. Usually the breaks below the channel after a big channel down is usually the bottom. And now again, trying to pick the exact price. People who think that's simple to do are just high on something, you know, because picking the exact price means you know who the last liquidating party of concern is to the market maker. We don't know that. I don't even try to know that. I just try to watch the levels, because the levels will unlock, you know, the price action. So if 120 breaks, you're going to the 200 month. There's no doubt about that. That seems very logical. However, keep in mind we are coming back into the 2009 highs in the TLT, 2008, 2009. I would not be surprised if we held here. Now, again, one day doesn't make a trend. Just be aware. Picking bottoms and tops is a science and an art combined. You need to know the science of what to look for, and the art is just allowing it to happen. You know, a lot of people struggle with that. I struggled with that for a long time. It just is what it is. I think rates, again, have priced in a huge rate hike, in the sense that the Feds have only done 1/4 point. The market, I think, on the 10-year Treasury is almost getting close to 3%. Keep in mind, when all this started, it was at like 1.25. So it's priced in about 7 rate hikes. We'll see how that works out, because I don't believe the Feds are going to do that. Because, again, if you look at the Discord room, I posted this morning. The Fed balance sheet hits new all-time highs of almost $9 trillion. It's not like they're really backing off their quantitative easing. They're just saying they're going to buy less mortgage-backed securities and certain bonds. I don't believe it. Anyway, the dollar, we talked about this. Once it held, the 20-day could go up to channel high. Be aware we are at monthly resistance here in the 27s. Could this break out? Get up to this channel high? Possible. The stuff going on with the world with Ukraine and Russia is putting pressure on the dollar to go higher. We will see if it sticks. This is a VIX. This is one that I keep telling people, hey, be careful being a bull of the market. You have a W bottom. I know that's not really the best W. You made higher highs, and now you're making higher lows. We held the 200-day. We talked about the market action getting weaker. I like that the VIX is only at 22 as a bear, and the market's peeling back. That means that there's still a lot of complacency, and people don't believe it. There's a lot of folks on the Discord board who are just, they think the market is bullish, and we're going to get into why I think it's actually bearish near term. We are coming into earnings season and buyback blackouts going on currently for the next 6 weeks. We'll see how that all plays out. I was thinking we might get a pop into earnings, on a small pullback, but it's starting to feel like this pullback might be a little heavier because the way the bond market's acting and just in general how the market just feels wrong in a sense for bulls. So first we get into the SPY. It feels like a head and shoulders top. We couldn't get over the 20-week. Now we're below the 50-week. Next week will say a lot going into earnings. The banks had bad earnings. They're forecasting worse earnings. Industrials aren't acting amazing. They're starting to look a little tired. The Qs. Now the Qs look way worse. They're now below all the moving averages. The gap below the 50-day this week. This whole week, again, OPEX, CHOPEX. Look at this. It's just 4 candles of exact size just chopping around for the most part. And you closed at the low. That isn't bullish. We will see next week, but people are saying this is a head and shoulders bottom. I'd like to zoom out first and go, where have we come from, where we're going? Watch the 20-month, because if the 20-month breaks on the QQQ, you have been holding this thing forever. You had weeks or months where it would kind of get under it and come back. You had those 2 months. Now, if you're not watching this video, watch this part. Pay attention. Pull up a chair, and if you're running this in the background. Wicks under the 20-month. Got it. Well, now what's happening is if it was bullish, it should go back to the highs. It's not. At this point, you have to be on red alert, because if this breaks the 20-month, we haven't seen the 50-month in forever. I don't know if we'll get there. This is the old channel high. I would guess somewhere around 300 is going to be your first downside target. Be aware, I don't feel like the market's bullish, and I'm not married to my thesis, but let's run through the evidence. IWM, we talked about this in November, peaking before the market peaked. Came down, hit bottom first in February and March, popped back up, and then it's been acting weak. I would think if the IWM was really strong, it wouldn't be near the lows. It would have had a stronger pop to a higher low pullback. At this point, it looks like it's dead in the water. Now, again, we'll see what happens. I'm not really predicting near term, preciseness. I just think in time there will be weakness in the market. So if you were bullish long term, I think you're going to have some problems at some point, because the liquidation break that I think is coming will affect even gold. And that's why I want to run into it. Gold, people are super bullish. If you go, again, one of the things I like to look at is sentiment, because I know one of the major rules and laws of trading is that the market makers and the market in general is meant to take as much money from as many people as possible. The problem with gold right now is that everyone's bullish, but the action isn't making new highs. Now, I know the miners may have invalidated that today, but it is OPEX. I don't really trust that in that sense of this action during options expiration, because I know it can be a shakeout week or a trap week. I'm watching this action. I sit here, I see, all right, like a doji potential, a gap up doji, and then you have another gap down doji. This to me could be an island floating reversal. The same thing we saw in VALE, where you get like a novice gap and a little pro gap, and then it chops and then it flops. I know everyone's saying it's a big cup and handle. Trust me, I completely agree. The thing that I have a problem with currently right now, is the Feds. The Feds need to slap all commodities down. They cannot allow this price action in the metals. I wouldn't even say the metals. It's more of oil, metals, materials. Everything that is a commodity input needs to get priced back in the near term. If they let this stuff run, you can't put the genie back in the bottle. And knowing the Feds and their endless balance sheet and ability to manipulate the markets, I just don't feel comfortable that they're going to let this happen in the near term. They really need to slam things back because people are calling for it. And not people in like retail. I'm talking about like the actual politicians are freaking the fuck out, because if you don't get a control of the price action in the materials market and oil, there's going to be riots in the street, because prices on things tend not to go down after they go up unless you have a major recession. They don't want a recession. They want a short-term reset. That's how I look at it. I could be wrong. Silver. You know, we've been spot on about this. We talked about this popping up and then it's making lower highs. If I trust a gold move, I'd like to see silver leading it, because one of the things that's very obvious about silver is it's like the red-headed stepchild of the metals market, and that if you think about silver, when metals are pumping, this should be leading, should not be lagging. That's all I can really say on silver. Now, I know a lot of people don't want to hear this, but remember, I'm a big believer in this stuff long term. I just know it's going to be choppy and sloppy coming off the lows and breaking out over the 2000 for, say, gold, or getting silver back over 30. It's going to be a process. Unfortunately, these guys still have their hands in the cookie jar manipulating this shit. GDX. Now, here's a little thing going on that ultimately I think is bullish for the metals if this can be confirmed. Your next stop is this 41.72 old high. I'm impressed the GDX did close at the highs. You know, we talked about the option penning might be 39 to 38. Wrong. Look at that. Now, keep in mind, the market makers can manipulate the action within the options market. People try to rely on the pen action as a rule or law. It's not always right. We're watching these levels. I know it is breaking out. I don't really trust it because the volume A is dog poo. I'd like to see when you take out level highs, you want to see massive short covering and buying. You want to see institutions layering in big orders to push the market higher. The volume isn't showing it, so we'll see what happens. The GDXJ junior miners getting over that level. Hey, congratulations. We're filling this gap right here. Probably on Monday, if I had to guess. Maybe Tuesday. From there, we'll see what happens. Again, it's hard to be bullish seasonality. If you check out the seasonality for metals, you will realize very clearly, like, the second quarter every year is just not ideal. Why is that? The seasonality? I think it has a lot to do with the fact that holiday season for gifting, and Valentine's and Christmas and Thanksgiving, I guess. I don't know. Just the end of the year gift process kind of hits a lull after Valentine's Day and then the Chinese New Year, and so you don't see a ton of metals being bought into the early summer. Then it goes back into that season where that stuff gets bought and futures contracts get lined up for production, whatever you want to call it. Anyway, long story short, second quarter not ideal. We'll see what happens. Could be wrong here. Not most years it is crap, but maybe this year's different. I'm hedged. I'm not going to believe in it. I'm not trusting it because I can miss a small move up or a big move up and wait for a pullback. Nothing goes in a straight line. I don't have this FOMO. AEM holding high and tight. Again, watch the 20-day. AG. Now, we've been talking about AG because I believe AG should be leading up if the market's going to break out in metals. It's back up at the range highs. We'll see what happens. It's very close to potentially breaking out. If it's going to go, it needs to go. PAAS, Pan American Silver, it's breaking out the higher highs. We're getting into old VAP zones. We'll see what happens here. The Doji on Friday with light volume. Again, this breakout is just very light, tough to trust. You never know. Newmont, everybody's excited about Newmont. I get it. Is it an M pattern? I don't know. It kind of invalidated that on a Thursday and Friday. Monthly is interesting because we are breaking out to new highs. You can see that there is a trend line. Oh, Jesus. There is a trend line here. I apologize. I don't have this drawn on this computer. We'll draw it for you folks now. Just live. Boop-a-doop-a-doo. we were breaking out. The volume spiked last week. We'll see. I mean, I guess there's a way of drawing it like this too, isn't there? Multiple ways. I personally struggle with this one at this point because, again, I think they're going to do well. I just don't trust the miners and metals at this point. I am wrong. Clearly, don't. There's nothing really to say. You're going to be wrong. I'm going to be wrong. But my point of seasonality and trusting it, I've been a seasonality trader for last like 10 years, and it's kept me from getting caught in positions that I get stuck in or in places where the markets don't move, and that's where I'm at. Now, again, let's get into commodities. I think this is an M pattern on X. We talked about it hitting the 200 month. If you see it, let me zoom back in on the month. You see it there in the blue, light blue. That is the 200 month moving average. Nice run. Pop, chop, pop. I'm assuming chop. Again, materials I think need to take a break. Nothing long-term destructive, but just backfill. So break the 20-day, it's game over. VALE, speaking of the island floating reversal, you had the gap up, then the gap down, and now it's breaking. We're breaking the channel lows. This looks like a bull trap. I'm looking at the 16, 17 range. Now, again, this is where if the material's starting to weaken, I'm telling you, I think the market's going to get hit overall. I don't think people are going to rotate back into tech because interest rates are higher. People don't want to play on tech. And I've had this rant on tech before, and I'll get into it in a minute or two. Let's finish up materials. Cameco, we're coming into the monthly channels now, range highs, and here, the 50% fib. I like this long term, but as I've said, uranium, these stocks have been on fire. 18 to 32, that's a huge move. Let it pull back, maybe 20-day. Maybe you get lucky enough, pull back to the 50 or 100. I like these names long term. Short term, I do not. Mosaic, CF, we talked about this action, wanting to buy the dips. It's getting tired up here. I thought we were going to have a head and shoulders. Clearly, again, I'd leave it up here. I'm okay with being wrong. We've made higher highs, channel high in play, maybe. I think that I'm a little concerning about Mosaic is that CF. Some of these other names don't look as strong, and so we'll see what happens here. This feels like an M formation, but keep in mind these stocks have been on fire. 44 to 112. Mosaic, I think, was in like the 20s, 30s at the lows recently. Yeah, I mean, as of last year, it was in the 30 range. I mean, up to 76. That's a big move. This is very steep action. I don't trust steep action because eventually it starts to pull back, and when you get these straight line moves, it doesn't necessarily mean the bull market's over. It just needs to digest. Think about your favorite stocks from the last 5-10 years that when they go in straight lines, then they pull back. If the bull market continues, they make higher highs. It's really that simple. Tech, again, this is why I don't like tech. Let's get into AMD. I've been short this from the 125 pop, took some off here, and it just continues to go lower. I'm letting this thing ride. I think it's getting down in the 70s and 80s. People go, why is tech so shitty? Well, higher interest rates. Tech can't borrow endlessly to invest in their business. Interest rates are higher now. They don't borrow at these rates because they're kind of punitive. And also be aware that inflation, tech doesn't like inflation. They have a hard time raising prices. Tech competition typically is deflationary. The best tech company usually is creating lower prices for more people to buy. As the inputs rise, aka metals, materials, the margins on tech get squeezed very hard, and they almost at some point become discounted to each other. And that, say for example, semiconductors, they'll just start undercutting each other, try to sell inventory of theirs. But the problem is that their margins continue to get squeezed as the inputs rise in cost, and that's where inflation and tech do not go together. Hence why I've put out my video from December 29th on the tech war. Who wins, the soldiers or the bullets? And in the tech war, the soldiers are the companies that are selling the product. The bullets are the inputs. The inputs are the ones that have been winning. If you noticed, materials names in the last 6 months have been on fire versus tech. Apple, here's another stock we are short. We got in a little early here. We thought, the low 170s. We ended up getting up here. And again, remember, we're not all or nothing traders. We layer in. We saw the lower high. It's been peeling back. Friday's action was rather impressive. I added back to the short. We hit the 20-day. Again, if you don't know this, check out Twitter or follow the Discord room. We post the live trades. We literally hit the 20-day, 2-day range. Took a shot on it. Look, closed at the lows. That's an awesome trade. You can only hope that everything is that easy, and it was. At that point, I mean, I still think it's going lower. I don't know why we wouldn't go back to 150s. I told people this action in Apple to end the quarter was kind of a red flag. Like, especially if it made a lower high, which we did, and how it means that we're probably going to go back to the low end of range. Time will tell. We'll see. Earnings are coming up. I mean, they need to initiate a big buyback and dividend and all that stuff. I mean, maybe the market will like it. I think at a certain point, it seems like a waste of cash for Apple. They should invest in their future technologies versus trying to buy off Wall Street. That's another topic for another day. MicroStrategy. We've talked about this one. It's kind of stuck. You know, if Bitcoin's not going higher, I would watch the range here at 404, like the low 400s for a potential buy if Bitcoin is bottoming. Roblox, we've said we ultimately think that this thing might be coming back down to range lows if this head and shoulders complex does not hold. You just basically need to hold the 42s. If not, it's going back to 36. Keep it simple. Let's move in right along. Tesla, whether you want to believe in this matters, like Elon's going to sell his stock to buy Twitter, I don't really care. I still just think this is technically busted. You had a monster run up on the monthly. Talked about this. You hit the channel highs, you hit the channel lows, the 20-month you bounced. Now you're making a down, like it looks like a pennant down. You can see it here. Draw it for you folks. Boom. I think lower highs after a monster run is bearish. It takes time. But lower high, I think it's going to fail. And so it doesn't mean Tesla's going out of business. Stop it. People go, oh, you're too bearish. It's like, no, just look at like the ARK fund, you know, like look at tech. It just doesn't look right. You know, a lot of tech is just busted because of this interest rate movement. And ultimately, again, if interest rates go lower in the near term, I doubt I think materials will still lead versus tech. Now, tech could pounce, but I just don't trust it long term. Just keep it that simple. I think Tesla is not a buy, but I'm also not shorting it yet. PENN, talked about March Madness, didn't go. I think you just got to stay away from these stocks. UTHR, Mikey Mike, told you, thought the 100, 200 day would hit. We got it. Now what? Tough to say. It really depends. The volume isn't great, but we talked about, say, like this double bottom bear trap. You pop, held the 20 day, you got up to the target highs, especially held the 50 days. It's been acting very technical. If you see it's chopping its way up, I would at this point just say it's hard because biotechs kind of do their own thing. To me, it does look okay long term, but it could be in a choppy range. You know, the last time I went from like big move, took a pause, big move, took a pause. You really need to see these lows hold. If it does, it could break out. Again, biotech has its own dynamics. Smaller companies can get bought out at any point. It is acting okay in this market. Let's just call it that. It's acting better than the market. EXPI, it's a little disappointment because the way that this price action is getting hit, you know, you got to have a stop. I like this stock in this range, but guess what? The market's penalizing everybody involved in housing. Fortunate thing about housing is people need a place to live. They're always going to need a place to rent or buy. I think this company's doing well. The headlines got really stupid last week. Someone posted some shit that didn't make any sense to me, considering that I work for the company and I see everything. And right now we're destroying other brokerages. We're doing everything remotely and we're keeping costs down. We're making we're giving brokers more opportunity to make money versus the brokerage make more money. And ultimately the brokerage is EXPI, but we're all shareholders too. And it's a business that to me seems very likely to do well in the long run. I could be wrong buying stock, but it just seems cheap. I know it was at 90. I'm not expecting 90, but anywhere in the 20s or the teens, seems like you could easily catch a double when the housing market just kind of stabilizes. When it does, I mean, it really hasn't dropped either. It has been stable. XOP, this has been a really hard trade for the short. You know, we're taking shorts up here in the 141, 142 and added a little up here for drip. You know, people say, "Oh, you're an idiot for shorting oil service," and it's like, okay, we'll see if I am or not. But I'm using reference points. I'm using the old high or the old IPO price. I'm using the 100-month. There is a fib here. The 0.382 is in play. I mean, it seems very logical. This is a big move. 30 to 145, 143. It's getting tired. We talk about rubber band man theory. I mean, it just pops. It's getting choppy. This action, and keep in mind, like where we've come from. Like, remember, notice how it was nice and smooth up. It's getting a little choppier, and we've gotten this, I wouldn't call it a straight line move, but from 114 up to 142 is a pretty straight line move. We'll see if this is a bull trap. The volume is dying. You can tell demand is dying. But again, one of the things I'm watching is, say, like ExxonMobil. It's filled this gap, and we talked about that was always possible. But the high was in March. This is the big dog. We'll see what happens. I can be wrong. I'm trying to pick trades that are high probability, and the probability say still can be wrong. So I hope that helps. I appreciate everybody. Have a great Easter weekend. If you have any questions, I'm around. Stop by the Discord room. Look forward to catching up, and yeah, I will be around. Hit me up. ThinkPad.
Thanks for watching. For more trading knowledge and insight, click on the videos on the right, and also join the Discord room. Link is in the description below. If you have any questions, please stop on by the Discord room and let's chat. Thank you.